The moment you've been waiting for. Nvidia just reported earnings and smashed records again. But is this AI giant unstoppable, or are cracks starting to show? Hot off the presses, Nvidia beat on the top and bottom lines and strong guidance. You can see non-GAAP EPS 89 cents, beat by 4 cents. That revenue was up 78% year over year and beat by 1.17 billion. So you're talking about almost $40 billion in revenue. For guidance, we have revenue to be expected at 43 billion. That's plus or minus 2%. Expectation consensus was 42.05 billion. So this is a double beat and a raise. The full fiscal year revenue rose 114% to 130.5 billion. So much of the focus here for the future of the stock is going to be about Blackwell. We expect that to be a second half story. And Jensen Huang, the CEO, said demand for Blackwell is amazing in a statement. So data center, guys, is now 91% of the total company sales, up from 83% a year ago. And that's up from 60% in the same period in 2023. The pivot here is absolutely amazing. So Nvidia went from selling GPUs for computers, for PCs, and just in a few years, 91% of the company's revenue is now B2B and data center AI focused. So data center revenue, $35.6 billion, up 93% on an annual basis. And that also beat expectations of $33.65 billion. And gaming is still down, $2.5 billion in sales. Expectations were $3.04 billion. So this is a decline of 11% on an annual basis. Now, this is across the board. Gaming has been down. And one of the future drivers for growth for Nvidia, I've been telling you on the channel, is really about robotics, but autonomous driving. And automotive sales is $570 million, and that's just a fraction of the company's business. So there's lots of room for growth and lots of TAM here. Nvidia tells us that it has a $100 trillion total addressable market, and that's from computing, healthcare, transportation, and manufacturing. So we started with perception AI, and then, of course, Gen AI. Now we're in agentic AI, and next is going to be physical AI that's going to be self-driving cars and robots. And one thing that people don't talk a lot about with NVIDIA is going to be healthcare. A $100 billion opportunity for AI factory, AI agents. So healthcare is a $10 trillion industry, $3 trillion in spend, and they're saying hundreds of billions in AI compute opportunity. And NVIDIA does have a great healthcare and life sciences ecosystem. You can see all the partners on here, some very big names. So this is about digital AI agents or health agents. And NVIDIA is partnering with all these different companies, including Deloitte, to make different bots and AI agents. And you can see, I'm just scrolling through, but there's lots of different models here, lots of opportunity for NVIDIA in healthcare. This is using NIMs for powered drug design using AI factories, drug discovery assistance, building genomics data with all these companies on your screen, robotics for healthcare from companies like Moon Surgical, and even a partnership with the Mayo Clinic for pathology. Here's a headline from Seeking Alpha: NVIDIA in focus, 2026 top expectations on amazing Blackwell demand. This is what you want to see as an NVIDIA investor. Now, right now, as I speak, I'm making this video as fast as I can as soon as earnings come out. Right now, the stock is pretty much flat. It's been bouncing around and slightly lower. We still have the earnings call coming up, and that could make the stock go either direction. The option activity is implying a 10% move plus or minus. So you could see some pin action tomorrow. So here's that quote I referenced earlier. Demand for Blackwell is amazing as reasoning AI adds another scaling law. Increasing compute for training makes models smarter, and increasing compute for long thinking makes the answer smarter. We've successfully ramped up the massive scale production of Blackwell AI supercomputers, achieving billions of dollars in sales in its first quarter. AI is advancing at light speed as agentic AI and physical AI set the stage for the next wave of AI to revolutionize the largest industries, including healthcare that we just talked about. Now, we've talked a lot about this in Discord, but the 4 big tech companies on your screen, Amazon, Alphabet, Microsoft, and Meta, they're spending $315 billion on capex this year. Now, recently, you might have seen this from TD, and it says that channel checks indicate US data center lease cancellations by Microsoft. Now, the next day, Microsoft clarified that report, saying that $80 billion infrastructure spend is on track for this year. So I'm taking a moment here to edit back in. So as I'm going through the video, the earnings call is happening, and I want to edit in some of the earnings call notes. So Crest addressed investor concerns that efficient models like Deepseek's R1 may limit the need for additional NVIDIA chips. This is why we had the Deepseek sell-off in late January. New ways of running AI models that ask the AI to generate additional information could require as much as 100 times the amount of NVIDIA chips she said. In quotes, long thinking, reasoning AI can require 100 times more compute per task compared to one-shot inferences. If you've been following the channel, you know that AI inferencing is going to be a big deal, and NVIDIA is going to be part of that. The vast majority of our compute today is actually inference, so already. Jensen Huang told investors, he said that the next generation AI algorithms could even need millions of times the current amount of computing capacity. This is basically squashing that worry that investors have that NVIDIA is just going to disappear tomorrow. One thing I want to note here, NVIDIA said it spent $33.7 billion on share repurchases in fiscal 2025. Now, the earnings call just started. You can see the stock is up 2%. Now, this stock year to date is actually down 5%. In the past year, it's up 65.99%, and it's up 1,844% in the past 5 years. Here's the press release directly from NVIDIA. Again, record quarterly revenue, $39.3 billion. That data center revenue was $35.6 billion of that number. So we're talking about 78% from a year ago and 93% from a year ago. And that record full year revenue, $130.5 billion, up a whopping 114%. Some other key highlights. Announced NVIDIA, of course, is going to be a tech partner for the Stargate project. That's $500 billion. Revealed that cloud service providers, Amazon Web Services, CoreWeave, Google Cloud Platform, Microsoft Azure, and Oracle Cloud Infrastructure are bringing NVIDIA GB200 systems to cloud regions around the world to meet surging customer demand for AI. More partnerships with AWS, partnership with Cisco, collaboration with Verizon, and this is for AI enterprise and NIM accelerated computing. Unveiled partnerships I mentioned earlier, Mayo Clinic, but Illumina, Arc Institute, and more. And I do think genomics, drug discovery, and healthcare will be huge for NVIDIA in the future. Also launched NVIDIA AI Blueprints, NVIDIA NIM microservices to safeguard applications for agentic AI. Announced an opening of NVIDIA's first R&D center in Vietnam. The professional visualizations, never really a big segment either, but fourth quarter revenue, $511 million, that's up 5%. We talked about gaming, that's actually down 22% from the previous quarter, 11% from a year ago. The full year revenue did rise 9% to $11.4 billion. Automotive and robotics, up 27% from the previous quarter, 103% from a year ago. This number is still small, but there's lots of TAM for NVIDIA to grow. And lots of new partnerships announced in automotive, including Toyota and many others. Of course, we've talked about NVIDIA also partnering with companies like Uber. Now, the gross profit margins are very important, and you can see they're 75.86%, and those are coming down a little bit. This is a very attractive number, but when these gross profit margins start to decline, that's when the stock could start to see some problems. In fact, this is probably part of the reason why the stock is muted after hours. If you look at this, the gross margins are expected to be 70.6% and 71% respectively, plus or minus 50 basis points. Now, these gross profit margins here of 75.86%, this is TTM, so 12 months trailing. So that's come down 5%. And as that gross profit margin drops, it will put pressure on the stock price. But right now it's firing on all cylinders and it still has that pricing power. As far as growth, the metrics are out of the park, A+. The valuation's where it gets tricky. Now, we're going to look at forward gap PE. It did slightly beat on that. So if you look at this number, it's going to be a little bit lower, but it's still trading at somewhere around a 42. That's for the gap forward PE. Now, when you look at the PEG ratios, though, if it keeps growing, it grows into that valuation very quickly. And where it gets really complicated is the price of sales. The forward is going to be somewhere around a 22 or 23. The margins, the profitability, and growth are like nothing we've really ever seen before. So where is the stock headed? We're going to look at a chart here in a second. This is from TipRanks. Of course, you don't buy or sell off of these, but it's good to have an idea. 35 analysts, and so this is going to change. Of course, after this earnings report, these are going to change tomorrow. But as of right now, you have 33 buys, 2 holds, and 0 sells. The highest price target is $220. The average is $177.87, and the lowest is $135. So at $177, you're looking at 35.49% upside. Now, looking at the chart, we double topped here around $153. Pulled back recently. This is the Deepseek news, $113 a share, bounced up to about $143 and then pulled back here recently, got down below $125 and now it's $134 in the post market. So where's the stock headed from here? I believe, especially the second half, when these Blackwell numbers start to pull through, that we're going to come back and we're going to retest this 153 with some time. We'll break that. You're going to have some resistance maybe around 162. This R3, Fibonacci R3 is 166.70. And I do think you'll see the stock between 165 and 175. Again, the second half of this year, assuming that earnings and everything go well. Now, on the extension from that, it's possible that you could see $200 per share on Nvidia. And as we saw here, the highest price target before this earnings report was $220. I won't be surprised if you see some of the price targets go up to something like $250 tomorrow. So be patient with the stock. The story's there. It's still intact. I've been long since 2017. You know the story, under $4 a share, and I'm continuing to hold shares. It's my largest position in both of my growth portfolios. Is it a buy here? Well, that's up to you. Of course, I have a much lower cost basis, but I do think Nvidia stock is going to go higher with time. Thanks for watching. If you're new here, make sure you subscribe, click that bell for notifications. If this video is helpful, drop me a like, drop me a comment. Have a great rest of your day. Take care.